Hello traders, Day Trader Matt here of businesswithtrading.com, doing a trading strategy recap for the 2nd of June, Tuesday, and today was another awesome day in the markets. So far we've had 2 trading days of June and we're already off to a great start. Today we pulled 9.25 points out of the market with 4 trades. And that's why I talk about all the time. You want to be able to develop that consistency in your method, be able to consistently take out profits as much as possible. Because when you have days like today and yesterday, it just really gets your month off to a fantastic start. I've had months where your first day is a losing day, your second day. But to have a month like this start out so well, it's because we strive for that consistent performance. Try to take a little bit of money out of the markets every single day. So that way when you have your really good days, you're just building your P&L. It's just, rather than trying to make up for losses, it's just building it. And that's really what trading should all be about. That's how I view trading. So anyway, what did we do today? Our first trade was a long right here. We got long, took some profits. Price came back down. We got long again. And we ended up taking profits as the market rolled over. It hit our stop, took us out. It is what it is. And then price started to run lower. A little more than what I was anticipating. But, that's why sometimes it's better to wait and see what plays out. Rather than just jump in, oh, the market's moving, let me jump in. Rather than do that, I call that the floor trader approach. Just listening to the floor for so many years, it seems like that's what they do. A lot of traders just jump on the bandwagons of other traders. And, it is what it is. I can go into a long story, but I'm not going to bore you today with that. So anyway, price comes down, and we get long right over here. We're able to take some profits up here, and then price does come down again, and then it started to move up. So we're not in this move. Market moves up, and as it comes back down, we do get long right here, and we end up getting out towards the upper part of, actually right over here. Market came up, it started to come down. That's when we got out, and then price does come down and it shoots up again. So as it came down from here, I was not exactly sure how it was going to play out, so I didn't really want to be in it. And then it actually does shoot up, so that was interesting. And we were looking for a long slightly lower, which never happened. And by the time price was up here, it looked like it was going higher, but at that point, we would have to have more risk than I'm comfortable with in the trade. If you trade with me, if you know me, you know that I like to risk 2 points or less. I don't like to risk 10 points. That's crazy. I see some people out there risking 8 points to make 4. Risking 8 points to make 6, 8 points to make 8. It's totally ridiculous. I don't like to risk a lot. Trading is not about how many times you can make money. Price went against me 20 points, but it came back and I was able to make $100. It's like, what the fuck's wrong with you, man? Why would you do that? Because trading is more about knowing yourself and being able to grow and become better, be able to improve. If you're risking 20 points to make 2 points, or 8 points to make 6 points, or even 8 points to make 8 points, that just is a lot of risk. And as a day trader, that's retarded in my opinion. Why would you do that? Doesn't make any sense. I saw a video that was sent out the other day, and the person was risking more than they made. But because they're trading multiple contracts at a time. They show, well, I made this much money. But I was looking at the risk and I'm like, wow. There are obviously people out there that watch that. But, it's just risking so much. And that's what I try to, talk about with the trading group and everything. Risk is something that should not be taken lightly. It's something that's very important. It's like if you only have enough money for a tank of gas, but you want to go to your friend's house that will take that entire tank of gas. Would you spend your last dime on that tank of gas to go to your friend's house knowing that there's no way you're going to be able to get back, and there's no way you're going to be able to work that week to make a paycheck? That's kind of what risk is. Do you want to put yourself out there just vulnerable like that? It doesn't make any sense. So anyway, thought it was a good analogy. Well, let's look at our first closed swing trade of the month. And it turned out to be a really good one. Dollar futures. And we ended up getting short last night. I know it looks really, really good. I really didn't think the entry was going to be as good as it turned out to be. I thought price would have come up a little bit more than it did. But we got a phenomenal entry, 97.60, and price just dropped, which was awesome. That's really what you want to see. So this morning, we sent out to the members, let's take profit 96.20. We did. First position, profit 96.20. Then price came down, it came up, came down. And as we did this, we moved our stops down. So this stop ended up moving lower, target here. And then we put our second target as price was right here. Let's put in a target at 96. And price actually came up and took a sell. I really did not expect that to happen, but it is what it is. And it's hard to complain when you're making this much money here. So, let's look at what we actually did on this trade, because I bring it up so I can talk about it. So, we got short right about here. Our stop was right about here, which was 30 cents. And times two sides, because we have two sides, so we look at it as two contracts, 0.60 or 60 cents. So that's what we were risking 60 cents. As price comes down, this first leg made $1.40, and then the second leg made $1.60. Which actually, if you add the two together, you get $3. Okay, so $3, we got a 60-cent risk. That comes to a 5-to-1 reward risk ratio. I talk about reward to risk a lot because it's very important. How much are you risking, which we just talked about. If you're risking 8 points to make 6 points on the ES, it's horrible. If you're risking $3 to make 60 cents on the dollar, that's totally ridiculous. The dollar is $1,000 a point. So on this trade, we made $3,000. We got short right here last night, and today we took profit. That's less than 24 hours. We made $3,000. If you're trading more than one contract per side, you made more money. You traded 10 contracts, you made more money. 20 contracts, you made more money. But that's what trading's about. Trading's about a small risk for a big reward. You're not trying to be Babe Ruth. Babe Ruth had more strikeouts than anyone else in history, but he was also the home run king. We're trying to be the RBI king. To take a baseball analogy. I don't watch baseball that much, but it's very good for trading analogies. You could really take any sport, but baseball seems to be the preferred out there in the industry. So we made $3,000. Turned out to be a good trade. And that's really what trading's about. So I wanted to highlight this, go along with our lesson of the day, which is, keeping risks small. Also trying to be patient. We waited for this. I talked about earlier in the week, I was looking for some trades. I'm not sure if I mentioned the dollar specifically. I think I did, but I don't really know. I know I was looking at it, and we waited. We waited until we got something last night. Over here, price, was after this, and we said, okay, well, let's put it in order, see what happens. It was about 4 or 5 hours in advance. Price came up, hit us, and dropped. And that's really what trading should be. You should be able to say, okay, this is what I like. I'm going to make it happen. Trading shouldn't be where you just open your platform and say, okay, I'm just going to make a couple trades today. We'll see what happens. When you're actually playing with money, and money is something that is important. I know a lot of people say money can't buy happiness and stuff like that. It's just negativity. A lot of those people don't have any. It's like, oh, money can't buy happiness. Is that why you're so sad? Because you don't have any? You have to get all of that crap out of your head. Money does buy happiness. And why does it buy happiness? Because you're able to do the things you want to do. Therefore, you should be happy. You can take off in the afternoon, go to the beach. You can take a vacation. You can take off some time and go hang out with your family or, your loved ones. That's what life's about. And that's what money provides. Therefore, money does buy happiness. It's not in the Freudian sense, but, he was kind of a wacko anyway. So, anyway, hopefully today's video made sense. Got something out of it. You can always add to the discussion below in the comment section. Thanks for watching. Have a great rest of your day. And I'll see you back here in the markets. Thank you.